if I can, so in terms of getting started, if I can just get your attention to the top left-hand corner here, where we've got the ascending triangle. Now, this is a variation of a triangle. So, in terms of characteristics, all you need to look for is a triangle that's got an ascending bottom trend line that goes in an upwards direction, and a horizontal trend line, or horizontal resistance line, I should say, on the top part. Now, you're looking for 2 hits minimum on each of those lines. So you got hit 1 there, hit 2 there on the horizontal line, and in the ascending line, which is the line going upwards, hence why it's called an ascending triangle, you're looking for 2 hits as well, minimum. But bear in mind, you can have 3 hits here or 4 hits in the bottom one. It doesn't really matter. But as long as you've got 2 hits each side minimum, that defines a triangle. So what you're looking for in terms of trading it is a break of that horizontal trend line. Because as you can see here, in terms of its characteristic, the market is trying to penetrate that line, failing once, bouncing back off the ascending trend line, failing twice, and then bouncing it back off the ascending trend line again. Oops. Delete that. And finally penetrating through that line. So what you're looking for is a close above that trend line. Okay. You're looking for not just a break, but a close above that trend line. So the only other thing you need to do then is figure out your target, and that is simply the distance the distance from the last bounce on the ascending trend line to the horizontal resistance line. And you simply play this with a 1-to-1 risk-reward ratio. So the distance between the last bounce and the horizontal trend line is your target. So your target, you measure obviously what that is. Let's say it's 50 pips. And then you start measuring again from the horizontal trend line in an upwards direction. So, and your target will be 50 pips. So I've just put X there and X there. Which basically defines that the distance between the last bounce and the horizontal trend line is the same as your profit target, which starts from the horizontal trend line in the upwards direction, where you measure 50 pips. So in the descending triangle on the right hand side here, it's exactly the same, but the other way around. So you've got a horizontal trend line, a horizontal support line, which is the same. And the market is trying to penetrate that twice. So you've got penetration attempt 1 and then attempt 2. And you can see that the descending trend line is what defines this triangle. And you've got hit number 1, hit number 2, and hit number 3 there. And finally, obviously, after the third hit of the descending trend line, the market has penetrated that triangle past the support line. So you're looking for a close below it here. And all you need to do then is measure the distance from the last hit, from this point here to that point there. And obviously start measuring, say, let's say 50 pips again, for the sake of argument that this is 50 pips. You measure 50 pips from the horizontal support line down in a downwards direction, because then X is the same as X here in this example. Then you've got a triangle. So I'm just going, it can take you to the bottom left hand corner here. You've got just a basic triangle. And the reason why it's called a triangle is because both lines are going towards each other. It's not ascending or descending, or in fact, it's both. So the same, we've got the same here. Hit number 1 on the descending line, hit number 2 on it as well. On the ascending line, you've got hit number 1 and hit number 2. So realistically, it's just a integrated version of the top 2 that we were just discussing. And it's traded in exactly the same way. You're looking for a close above one of the lines. Remember, this could be down here as well. If this failed and went in the downwards direction, then you'd be looking for a close here. But I'm just going to delete that for the sake of this example. So you're looking for a close there. You measure the distance between the last hit and that line there, the descending line, and you simply measure it from the same position in upwards direction. Let's say it's 50 pips. So your risk reward ratio is 1-to-1 again. And then lastly, we've got something called a wedge. Now, the difference between a triangle and a wedge is that the wedge, the lines of the wedge are, even though the lines of the wedge are pointing in the same direction. So you can see in this situation, they're both pointing downwards. Whereas in the triangle, you see one's pointing downwards and one's pointing upwards. Okay. That is literally the only difference, and it's traded in exactly the same way. So you are measuring the distance between the last hit on the bottom line to the close above the descending line in this example. So you're looking for a close there, and the distance X has to be the same as your profit target X in the upwards direction. And remember, it will be same, it was the other way around if you had a break below here, but obviously we're just going to use this as an example in this particular situation. And then you've got another wedge, but the only difference again is that this one is pointing in the upwards direction, but the lines look like they're going to close at some point. So it's very similar to a triangle, but both lines are pointing in the upwards direction. And again, for the last time, it's traded the same way. You measure, what you're looking for is a close below this line here. So you're looking for, in terms of your profit target, you're looking for the distance between the last hit and the point of penetration. So if that distance is X, you start measuring from the point of penetration in the downwards direction. So your profit target is X again. Indicator on this chart, and that will be Bollinger Bands. What I need you to do is actually load up 3 sets of Bollinger Bands, and in terms of setting, every single one of the 3 Bollinger Bands has to have a period number of 20. That won't change. That will be the same in every single one. The only thing that will change is the deviation in every one of those Bollinger Band settings. So the first one, deviation is 1. Then the second one, which is the next, in the one in the middle, needs to be 1.5 in the deviation. Period stays at 20. Just change the color as well so that you can differentiate. And the last one, which is the most extreme one, period stays at 20, but the deviation has to be 2. And again, change the color so you know which one's which. Okay. The period 20 is just this simple moving average in the middle, which is the 20 period moving average. And obviously that won't change because it's the same in all 3 Bollinger Band settings. The only obviously things that will change the deviation. So you got number 1 here, which is green in deviations, 1.5 in deviations, which is the orange one in the center, and then you've got the most extreme one, which has a deviation of 2. And obviously that will be mirrored on the other side as well. Now, the reason why we use Bollinger Bands in this pattern when trading wedges and triangles is because we only start shaping these patterns once they start bouncing off Bollinger Bands themselves. Okay, so as you can see here, what I've got is a bounce off the Bollinger Band here, and I can now start joining up that upward sloping trend line. Okay, and in turn, all I'm doing at this stage is waiting to see what kind of pattern will be created here, and I can see that this is a standard triangle that's being created, which, if you remember, is the bottom left one here, okay, which is the integrated version of the ascending triangle and the descending triangle. Now, if this was a wedge, i.e., one of these on the right hand side at the bottom, we'll still trade the same. Everything is exactly the same. It's just how the lines. The only difference is obviously where the lines are pointing. So I'm just going to zoom in a little bit for you here. Now, I should really say the reason why we use those 3 settings in Bollinger Bands is so that we don't miss out on any smaller patterns being made. So, for example, if you had just deviation setting of 2 and this pattern occurred, somewhere, let's say here, then you wouldn't be able to trade that because you still haven't had a bounce of the 2 period deviation. However, so that's why we put the other 2 in, which is 1.5 and 1, so that we give ourselves the best chance in defining and recognizing smaller wedges and smaller triangles in our charts. Okay, so that's the only reason why we use them. But we use the Bollinger Bands in exactly the same way. It doesn't matter what deviation setting they have. So once we've got a bounce off the Bollinger Band, we can see here that we've tried to break out once, failed, then go back down, then try to break out once again, failed, bounced off, and then we finally broke out. Okay. Now, if you remember, what we're looking for is a close above that trend line. Okay, above that descending trend line. Now, you could probably argue that if you zoom in a lot more, there could be a little close above that trend line. But to be honest with you, I'll be very nervous in doing that. So what I would do is wait for the close that's much more clearer, which in this situation is this one here. However, if my target is the difference between the last hit on the bottom line and the point of penetration, I'm already out. So I'm not going to be able to trade that pattern. Okay. Now, that doesn't mean that you can't trade this pattern, because this is when you need to use multiple time frames in order to get into that trade as early as possible. You know that the line's been penetrated, okay, and it hasn't closed. Let's just say that this has not closed above that trend line, and in order for you to place the trade in an upwards direction, you need the close. The only thing you need to do is go into the hourly chart, okay, which is H1, and see whether that's closed in the hourly charts, and you can see that it has. Okay, so I'm not going to put a line because I'm going to check some more time frames. So it's closed in the hourly chart. If you go into the 30-minute chart, you can see that it's closed there as well. Further on, if you go into the 15-minute chart, yes, it's closed. Okay, and in the 5-minute chart, it will close, because obviously the 5-minute chart is much lower. But if you're trading H4, then the only thing you need to do in order to get into these trades is have a look at whether the closes occurred in H1 and 30-minute time frame. If you're trading this in an hourly time frame, i.e. H1, then what you'll need to do is check the 30-minute time frame, the 15, and the 5. Okay, and just make sure. In fact, you can probably the 5 is just for a bit of peace of mind, but most importantly, it's the M30, M15. So just go back 2 time frames and make sure that this is closed above that trend line in 2 of the lower time frames. If it hasn't, then just wait till it closes, and eventually it will close, and you'll be able to get into the trade a lot earlier than you think. So back to our original charts. So we know we've got to close in H1 in this area here. In fact, I'm just going to mark it up so that you can see where we would have entered. So we would have entered there. Okay, and in fact, that's probably a little bit too long. 1 second. I'm just going to delete that. I'm going to use that. So we would have entered the trade round about there. Okay, we go to H4. And look how close that is. That is literally slightly above that trend line, okay? And then obviously what we do is measure a target. So we go just a little bit below this ascending trend line, so we're not greedy. A little bit above our other line. So we've got 370 pips. I don't move my cursor. I just drag it up in a different direction. Oops, sorry, what was that? 376. And 376, which is 131,544, 544, and that's our target. Okay, and your stop loss simply has to go just a few pips below this trend line here. Okay, I'm struggling with these little lines, but there you go. Okay, so your stop loss is here, just a few pips below the last hit. You measure your target, as we mentioned in the first video, in between these two, in between the last hit and the penetration. You look for a close in the lower time frames, and as soon as you have that close, you measure your target, and which in this case is 544, and you can see how quickly that went up in that direction. So remember, when you look, that is literally it. That's how you trade the wedge, that's how you trade the triangle, the ascending triangle. They're all literally the same, except they just come in different shapes and sizes. So remember, you only start drawing your lines on different sides once you get a bounce on one of the Bollinger Bands. And from that point on, like we said, you look for a penetration